One of Apple's biggest suppliers, Foxconn, is suspending operations in Shenzhen as the government locks down the region for a week due to fresh COVID-19 outbreaks. So what does this mean for Apple? Wedbush tech analyst Dan Ives joins us now. Dan, how concerning is this, or should this be for Apple shareholders?
It's concerning because that's a core hub in terms of iPhone production. I mean, really the vast majority of production comes out of that factory. Look, if this lasts longer than a week, then it starts to become a concern. For right now, they could part into other production factories across China. But look, it puts gasoline on the fire. It's the last thing as an investor you want to see in what I'll call the Silicon Valley of China, to see a shutdown, especially in this jittery market.
And Dan, great to have you here. Can you expand on maybe some numbers, throw some ideas of where exactly does this go from here?
Yeah, I mean, look, this is also in the backdrop of just massive shortages across the board that we're starting to moderate. I mean, what I'd say is that if this lasts for another 2 to 3 weeks, that could probably crimp production overall for the quarter, probably by 1 to 2%, especially if it goes into the end of March. And this is for a company that just launched the SE. You got iPhone 13, where demand continues to, I'd say, outstrip supply by about 20%. So I'd call it, okay, a week, it's nerve-wracking but containable. Goes past a week, starts to hurt numbers. And I think most of my conversations from last night to this morning with investors is trying to quantify that. I'd say 1-2% looks like sort of the production hit for the quarter.
Dan, does this hurt the rollout of the SE?
It doesn't hurt it initially, but if this goes to the end of March, then supply is going to be an issue going into that first half of April. Because Apple thought they were done with this. So and it couldn't, if you look at Foxconn, they'll be able to sort of play over the next week in terms of parsing to other production factories. But that's the whole issue. If this starts to last 2, 3, 4 weeks, really starts to become an issue, especially in the midst of this iPhone SE launch, which we believe was 30 million units out of the gates. And of course, in this market, this is exactly what you don't want to see, especially in this type of environment where, tech investors are obviously fearful.
And Dan, I want to broaden this out. I want to show everybody the Wi-Fi Interactive. I'm looking at one of our software heat maps here, and we're seeing a lot of green today, but you turn on the year-to-date button, and it just gets nasty. Microsoft down 15%, Adobe down 25%. When do you start scooping up some of these beaten down names on a valuation basis?
Yeah, I think software is as oversold as I've seen it since 2015. I mean, there were pockets in 2018 as well. Look, the high flyers in terms of the work from home, the Zooms, the Docusigns, I mean, those are at this point I'd say catching a falling knife. But when you look at core software, the Oracles, the Microsofts, the Adobes, the Salesforce, I view those as safety blanket names. Demand continues to be robust in terms of move to the cloud. And I think those are names that, as we look into the rest of the year, will be significant outperformers. But I think investors, look, they paint it all with the same brush in terms of software. But look at this transformation to the cloud. Look at cybersecurity as a massive pocket of strength. And I also think M&A is going to be on the horizon if these stocks continue to stay in these levels.
Dan, what did you make about that from that Docusign quarter? Now, we had CEO Dan Springer on the show on Friday, and he said he's likely to come out this week and be a buyer of his own stock. Are you a buyer?
I mean, I wouldn't touch with a 10-foot pole, because the problem is, I mean, he's a buyer, but I mean, if you look at the communication, you look at the guidance, you look what's happened to that business, it's a Friday the 13th situation for Docusign. And I think that's part of the problem in this market, is that there's a feeling from the street that these management teams just don't have their arms around what's going on in the demand environment. And I think that's the problem with Docusign. They could talk forever. Results speak, and that's why the stock continues to get crushed.
And
I want to circle. Go back.
Go ahead, Jared. Go ahead.
Well, I want to circle back to something. I'm sorry. I'm just going to go. I want to circle back to something that you said a couple minutes ago, Dan. You were talking about M&A. I'm just wondering, because you have some interesting speculation from time to time about some deals that could go down. Anything on your horizon that's piquing your interest at these valuation levels?
I think it's cybersecurity because when you look at Google Mandiant, that's speaking to this broader trend, more and more cybersecurity intertwined in the cloud. And that was a shot across the bow at Microsoft, at Oracle, at AWS, IBM. So I think you look at some of these names like a Tenable, a Varonis, a Qualys, a Ping, among others. I think you're going to see more cybersecurity M&A from cloud players because it goes back to like public investors, they'll sell these stocks. But the strategics and the financials, they're going to look at them hard, especially given some of these valuations, and they have tons of cash. That's why I think cybersecurity, M&A in particular, is where you'll see it. Look, names like Docusign and others, I mean, those stocks, another miss, they could continue to get the natural split, get cut by another 50%. No one's going to buy those strategic financial. Cybersecurity, totally different.
Dan, a new tweet from Tesla CEO Elon Musk warning about inflation. I guess this is a broader issue. It's not just a Tesla thing, of course. Warning about inflation impacting his business. Do you think just this inflation, whether it's steel, workers, you name it, is going to ruin the year for Tesla on the bottom line?
Well, I think Tesla's unique because, and I think they'll announce probably in the next 2 weeks another price increase. So they still have the ability to pass that through the consumer, very similar to what we see with Netflix, Amazon on Prime, and obviously some other sort of stalwarts. So I think for Tesla, they could continue to pass that along. And right now, demand's outstripping supply by about 40%. So I don't think that really necessarily impacts Tesla to the extent. But what Musk is talking about, I mean, it's become a real issue, especially in terms of what we're seeing on costs. And that's something that these companies are not going to absorb it. They're going to pass that forward, which just speaks to this environment, especially on auto, in a supply-constrained environment that continues to be more supply-constrained. Even when you look what's coming out of China with Shanghai province, I mean, Tesla obviously it's a huge part of their production. But then you look, that's why it's so important with Giga Berlin, as well as Austin, that, they continue to flex their muscles and diversify, which is important.
Well, speaking of supply, Dan, another automaker that has been hit because of the inability to get the supply it needs is Rivian. Really not a good quarter from this company last week. The stock has been down a lot. Do you feel the same way about Rivian as you do about Docusign?
Look, I think Rivian's another example of communication has been horrific and supply chain's an issue, but their ability to get their arms around and communicate has been unmitigated disaster. I mean, since the IPO, this has really been a black eye, story for the overall sector. And I think that's the frustration with Rivian is that we stay positive long-term because what I believe that they could ultimately broaden this out into in terms of really a category changer in EVs and pickups, especially on sport utility going 2023. But if you look, I mean, step by step from the quarters to the price increase, actually, mea culpa, no, we're actually not going to increase the prices. It's been the JV team. And in this type of market, that's not what investors want to see, which is why the stock where it is. We still have confidence they could get through this. It's a fork in the road. One more blunder, one more major hiccup. RJ and team could potentially ruin the Rivian story before it even started.
All right. Well, clearly Rivian is no Tom Brady. Wedbush tech analyst Dan Ives, always good to get some time with you. We'll talk to you soon.
Thank you.